You do know what they say, right? Never ever short a dull market. Please don't do that. So hopefully you've been staying away from those Great Depression trendline doomers and just trading the chart for what it is. It's an uptrend. We'll do exactly that today with respect to the Google and Tesla earnings from after the close. The most interesting thing there is really the massive capex announcement from Google. It's moving the semiconductor names more than Google itself. And therefore, the usual suspects, NVIDIA, AMD, Broadcom, they'll all be top priorities for tomorrow. So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 5 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off tonight on the SPY daily time frame chart. Let's just begin with a very simple question. What is the overall trend? Now, it's a little bit of a rhetorical question. Of course, this is a brand new all-time high. It's the highest high in the trend count, so of course the trend remains in the upward direction. That's bullish. We did find a little bit of a higher low here on the Tuesday session, but let's get pretty granular about this analysis. We know that we had a breakout attempt on Tuesday of last week from the balance range here, and it was a pretty unsuccessful attempt for a number of reasons, really 2 main ones. Number 1, the candle on the daily simply closed underneath the top end of the balance at 626.65. That's strike 1. Strike 2 is that there was no attempt intraday whatsoever at a meaningful gap fill reversal over the Monday high. That's strike 2. Buyers did not step up and do what they should have done to offer the next higher low in the sequence. So we sort of fast forward a little bit. Of course, Thursday of last week, it starts to look more like a successful breakout attempt. We have a daily candle that closes above. Friday starts to hold a higher low over the top end of the balance range. It was a poor reference point. We talked about that on Saturday, but lo and behold, Monday we spend the close up above the level. Tuesday, we repair that core and weak reference point, and on today's session, we actually offer a picture-perfect gap fill reversal over the Tuesday high. So as we think about this sequentially, let's just ask this from the perspective of, are buyers doing their job? The answer is absolutely. And if you're trying to short this because of some yearly resistance trend line, I would really encourage you to have second thoughts about that thought process. So what do we do about this chart going forward? Obviously, buyers are in control. This is a brand new all-time high. Do we just short it looking for a pullback? Probably not. The base case here is continuation into blue sky territories. We could use the upper edge of the weekly expected move as a reference point, but it's really just that. I would not second mortgage the house trying to find a short here. I wouldn't say, oh my god, it's impossible for the market to even think about moving beyond that. It's just a reference point, right, from the options market in particular. So if we go beyond it, it's really blue sky territories, whole and half dollars, any intraday levels that form. The other thing we can do here is use a Fibonacci extension and look at this through the lens of a bull flag to the low pullback of Tuesday from last week. And you can see here that the measured move of the bull flag is closer to about 641.50s. So if you did want to have some sort of target up there, you could hypothetically use that, but once again, this is a reference point. I would not second mortgage the house saying that the market needs to make it all the way there. If we get there and the market starts to reject, okay, we have a little bit of confluence, but I would not do anything that requires movement towards 641.50. So the classic example that we use is the 0DTE SPX traders, right? So if you're trading 0DTE options, I would not buy 0DTE 641 calls with the expectation that we're going here simply because it's a bull flag measured move, right? That's the simplest form of this. Let's take that off the chart and let's talk about possible pullbacks. In a picture-perfect world, now we would start to actually offer a higher low over the Monday high, and we'll see why on the hourly chart in just a second. That would be the best case scenario. Maybe a little bit of an inside bar here on Thursday, then a breakout candle on Friday. Pure speculation. There's nothing saying that it needs to take place that way, but I would really enjoy trading it that way. If we do see a little bit of a deeper pullback underneath the Monday high, I would really just start to look for, can we support again up and over that 626.65. As long as we're above that level, there's really no issues with the daily trend. We're well above the daily 20 SMA, and the market's really trying to just build out a new block in the upward direction. So this might then invite the question, where would we change our tone to becoming more bearish? Well, it's probably underneath that Tuesday low, right? If we stop holding on to the top end of the balance range that we've just broken out of, I would tend to think that this comes into question here. Is it possible that you have a lot of trapped overhead supply who got involved on today's reversal, on Tuesday's reversal? It's very likely. So some kind of lower high back in the balance range, probably at minimum, targets the bottom end of balance here, and then we'll reevaluate, right? Because let's not forget from the Saturday update video, it's still very possible that the weekly chart can yield some sort of a higher low up and over the 604.75. Now, we're not going to go to the weekly chart directly, but you can kind of envision, right, how if we hold up over this level on a weekly, it's still an uptrend like that, right? So that's the base case on the daily time scale. Once again, buyers are firmly in control based on everything we walked through relative to the breakout attempt and comparing it to what had happened on Tuesday of last week. Let's take a look at the hourly time scale and let's get a little bit more granular. You can really start to see how that Monday high is such an obvious place for the market to pull back and potentially offer a higher low. Once again, the market does not need to pull back. The market doesn't need to do anything. But if it does pull back, and if we can spot buyers showing up here for a potential higher low, isn't that beautiful, right? We have lows, we have higher lows over the structure. Can we offer some kind of higher low here over the structure from Monday? That would be picture perfect. So 631.50 becomes a top priority for me in the short time frames as we head towards the end of the week. When I say short time frames, I'm talking about hourly, talking about intraday, 15-minute, 5-minute, 2-minute. I'm not talking about shorting the market, right? What else can we do here? If the market were to come in underneath that, I mean, maybe we could trade some pullback shorts as intraday scalps only for risk reward, but only if it's a no-brainer and only if the market internals really support and suggest that at the exchange level, sellers are stepping up. So you'd want to see blood red market internals if this is even going to be a consideration. Otherwise, you're really just fighting the trend. And honestly, this market has been a pullback buyer's market. It really hasn't been a shorts market by any stretch of the imagination, right? So is it reasonable that maybe if we drop this, we support here? It's possible. I would look to get involved with a much more confident stance here, back over 631.50, undoubtedly. That would be Monday's high. It's also the opening print from today's session, a very, very nuanced open via the gap up on today's 9:30 bell. So with that, we could throw on a couple of our key sort of metrics and come in with our Fibonacci's and see where this 38.2 takes us. It's still over the top end of the major daily balance range, so I think it's reinforcing the idea that on the daily time scale, even if this were to take place, kind of A-okay from a pullback perspective. If we come in from this low up to the most recent high, I love how the Fib 38.2 is perfect confluence with that 631.50. Let's come in here with our intraday anchored VWAP set and see where this is at. And by the way, there's a couple of updated reference points. These two remain the same prior to the ceasefire, after the ceasefire. This is the beginning day of the balance session in here, and this is the Friday gap up from last week. So as you can see, we're above the entirety of the stack, and if the market were to pull back, it is possible that arbitrarily somewhere in here, the anchored VWAP could offer confluence of support, which is another reason why I would not really be aggressive on the short side. If you have this anchored VWAP here, and it is going to be kind of between levels, it really does not become an attractive short, right? And we could even play this out in terms of what should have happened if sellers were going to step up based on today's gap up. If this was going to turn into a double top, something along these lines, obviously sellers needed to do the first critical step, which would have been battling for price acceptance back down inside of Tuesday's range. Instead of offering a gap fill reversal over Tuesday's range, sellers should have fought really hard, tooth and nail, to get acceptance here, and then maybe tomorrow there could have been some potential for a neckline breakdown that looks like this. So remember, hypothetically, we're talking about if the market ended up looking like that, maybe tomorrow we would have had this as a follow-up attempt. It's not even a talking point. I don't know why I'm wasting my breath, right? Now, in all seriousness, it's helpful to know what could have happened, and therefore you can prepare against those base cases, right? So base case tomorrow, once again, pulls back, offers a higher low here, great, we get involved. If it is just some sort of continuation move in the upward direction, they tend to be fairly difficult to trade, but at bare minimum, it's likely not a short. And I think that's the big thing that I would want folks to take away from this. It's at bare minimum, not a random short because, oh God, the market can't possibly go any higher. It's a terrible, terrible reason to try to take a short. You need some sort of logic, you need some sort of reference, you just don't have that there in blue sky territories. Let's take a look at the market internals. If you're not familiar with the market internals, check out the video tutorial in the top right hand corner. What do we see here? In terms of volume flows, very substantial on the Tuesday and today's Wednesday session. This is beautiful because Tuesday once again repairs that core low reference point, cleans up the structure, and then the market makes an advance. So really strong volume flows there support the idea that new money buyers are getting involved in this breakout. If you look at the advanced decline line, it's not in trend higher zone, but it's pretty stable at an elevated 1000 read for both the Tuesday and today's Wednesday session. You'll notice here that the index score is actually red for a majority of those sessions, because on these days we actually spent a majority of the session under the opening print. So these recovery efforts into the afternoon are actually that much more impressive when the index score is technically red, right? Because hypothetically that means out of the 30 data points, a majority of them, or enough of a majority, are skewing the print red, but yet the market was still able to recover. That's got to tell you something about relative strength, right? Now over here, the cumulative builds on the tick, they're kind of lackluster, and I have to give a little bit of, I don't know if I would call it credit where credit is due. It's not like the sellers are doing much on the tick level, but you're not getting huge follow through at the exchange level. I'm a little bit not, what would the term be? I don't know how much weight we should put into this. What this typically would indicate is like, okay, breadth must be really poor. But as we'll see when we get to the breadth segment of today's video, breadth actually saw an uptick today. Really strong and like meaningful uptick, so I'm not inclined to say that about the tick analysis here. Let's jump on over to the market profile and see if we can learn anything from this perspective. Look at that poor high from the Monday session. That's been repaired as of today's close. The next thing that really becomes influential here is the spike from today's close. You can see M period here sticks up about 3 or 4 TPOs. It's probably much more than that if I zoom in. But the point is that the market only sort of produced this spike and then closed. We don't know if these prices are fair, so spike rules will be in force for tomorrow's session. Spike rules, what are those, you might say? Well, spike rules tell us if we open over the spike, that's as bullish as it gets, it means that the auction is incomplete to the upside. We should look for follow through higher, right? And this is price discovery into blue sky territories as well. We'll probably have to use an overnight high reference point if that becomes an interesting trade. If we open in the spike, which is somewhere in this M period move right here, then ultimately we learn something when we brigade bolt out of range, or if we brigade bolt back under the spike base, then we would say, okay, this is a little bit of a failed attempt to auction higher, a failed attempt to discover and accept higher prices. Now, the most bearish outcome would be if we actually open underneath the base of the spike to begin with. So not inside and then falling out, but rather just opening below. Then we would have trapped buyers who sort of caused the spike into the end of day from today's session anyways. And that would be underneath, if you want a technical level, at 63.9475 on the ES futures. If we end up opening below that level, I would be mindful of some sort of pullback to get into what's the reference point, right? Reference point is here. It is the Monday high, which happens to be, it's just mechanical in nature because of the way that the overnight high went right to it in this morning session. So 63.75.